The global economy is currently expected to grow by about 2.5%. If we see a meaningful improvement in productivity, that number could move closer to 3%. But without that productivity dividend, the second half of this decade is shaping up to be the slowest period of global growth in nearly 50 years. A big reason for that is slower global population growth, which naturally limits consumer demand. Another factor is how uneven goods growth looks across the region. Right now, growth projections range from roughly 1% in Europe to as much as 4.5% in China, with the United States tracking closer to European growth than to China's. Because of that, China's growth outlook plays an outsized role in determining global growth overall. Trade is a key piece in this story. U.S. tariffs have limited the expansion of trade, while Chinese trade faces fewer restrictions. At the same time, weak consumer demand inside China has increased deflationary pressure on some domestic goods, pushing prices lower. One concerning signal is the weak demand for high-end goods. That's being driven in part by a prolonged downturn in Chinese real estate, which has historically been a major investment vehicle for higher-income households. When real estate struggles, discretionary and luxury spending often slow as well. If that trend continues, China's economy could underperform expectations. The outlook, however, suggests that conditions could begin to improve in 2026. A critical factor will be non-real estate investment, including public and private infrastructure projects and the upgrading of capital equipment. China has the ability to direct investment internally, while market-based economies depend on investor confidence and sentiment. That creates a challenge. Ongoing uncertainty around global growth, trade, and public policy could make investors hesitant to commit capital. If that hesitation persists, growth could remain subdued. But if confidence improves and investment accelerates, we could see a stronger global performance. Ultimately, the next several years will depend less on forecasts and more on whether policymakers and investors can align around a clear direction. If you'd like to talk through how these global economic trends may affect your own financial strategy, you can visit larreawealth.com and schedule time directly on my calendar. I'm always happy to continue the conversation.